Imagine this. It's January 2025. You're sipping coffee, scrolling your phone, and you see a headline: Federal Reserve cuts rates again. Now, most people shrug, swipe past, and think, okay, cool, maybe my credit card bill will be a little less painful. But here's the twist. While the average person is busy moving on with their day, a small group of people, the wealthy, the prepared, are already in motion. They're signing contracts, refinancing portfolios, scooping up real estate, and locking in deals that will pay them for decades. Why? Because to them, interest rates aren't just some boring percentage on the evening news. They're signals. And in 2025, those signals are louder and more powerful than ever before. In this video, I'm going to show you, through stories, real numbers, and strategies, why falling interest rates could be your biggest opportunity to build wealth, if you prepare before the headlines hit.
All right, let me divide it into sections and discuss Section 1, the hidden power of interest rates. Let's break it down in simple terms. Interest rates are like gravity in the financial world. When rates are high, gravity is heavy. Borrowing money feels like dragging weights uphill. Mortgages eat into your income. Car loans cost a fortune. Businesses stall because credit is too expensive. But when rates fall, gravity lightens. Suddenly, it's like running downhill. Money flows faster. Borrowing gets cheaper. Investments accelerate. That's why markets don't wait. In late 2024, when the Fed hinted at easing policy, the S&P 500 jumped nearly 12% in just 6 weeks. Housing markets in cities like Austin, Miami, and Phoenix started heating up again because mortgages that were once 7% dropped closer to 5%. Cheap money doesn't just make life easier, it creates momentum. But here's the catch. By the time the average person notices, the wealthy are already 10 steps ahead.
Section 2. The farmer's lesson. Think of it like farming. 2 farmers are waiting for rain. One spends months preparing his land, planting seeds and repairing his tools. The other lounges around, telling himself, I'll plant once it rains. When the rain finally comes, both fields get wet. But only one explodes with growth. The other? Too late. The season is already half gone. Interest rate cuts are the financial equivalent of rain. The wealthy prepare long before the storm. They plant their seeds, building cash reserves, fixing their credit, scouting neighborhoods or businesses. So when the rain comes, they harvest first.
Section 3. Real stories in 2025. In 2023 and 2024, many buyers were locked out of the housing market because 30-year mortgage rates were over 7%. By early 2025, those rates slid closer to 5.5%. Doesn't sound like much, right? But on a $400,000 home, that drop means saving around $400 per month. Wealthy investors didn't wait. They refinanced old properties and bought new ones before the bidding wars restarted. 2. Businesses. According to the U.S. Chamber of Commerce, small business loan demand fell sharply in 2023 because rates were too high. But by mid-2025, banks loosened up. Cheap capital allowed franchises and startups to expand again. One entrepreneur in Texas refinanced her restaurant chain loan from 8% to 5%, instantly freeing up $50,000 in annual cash flow, money she reinvested in opening a new location. 3. Markets. Tech stocks like Nvidia, Microsoft, and Tesla surged again in 2025 as investors realized growth companies thrive on cheap borrowing costs. Even crypto, which had cooled in 2023, saw Bitcoin push past $70,000 again in early 2025 after the Fed signaled more cuts. These aren't random miracles. They're the predictable result of falling rates, and the people who saw it coming were ready.
Section 4. Why most people miss out. Here's the painful truth. Most people only feel rate cuts on a small, personal level. A little less interest on the credit card, a few bucks saved on a car loan. And yes, that feels good, but they stop there. Meanwhile, the wealthy think bigger. Average person. Cool, I'm saving $50 on my mortgage. Wealthy investor. I'm refinancing 5 properties and saving $50,000 a year, and I'll reinvest that into more assets. It's the same system, but 2 totally different outcomes. The reason? Preparation. By the time the news makes it to your TV screen, the wealthy already had their lenders lined up, their deals analyzed, and their capital ready.
Section 5. The 3 levers of wealth in falling rates. So how can you prepare? When interest rates fall, there are 3 levers that matter most. 1. Offense. Expand while it's cheap. Businesses and individuals should use this window to grow. That might mean starting a side hustle financed at 5% instead of 9%, taking out student loans for a skill-building program at lower cost.
Scaling a business when capital is cheap. 2. Defense. Protect and refinance. This is where the first big wins are made. Refinance high-interest credit card debt into cheaper personal loans. Drop your mortgage rate from 6.5% to 5% and save thousands. Pay off lingering car loans or student debt at reduced interest. The key here? Don't just celebrate the savings, redirect them into investments. 3. Efficiency. Make money work automatically. Set up systems so you don't hesitate. Automate savings into high-yield accounts. Invest consistently in index funds or ETFs. Move your emergency cash to 2025's high-yield savings accounts. Many are paying 4+%. Systems don't rely on willpower. They just work day after day.
Section 6. The Wealth Gap Widening. Now here's something uncomfortable. Every time interest rates drop, the wealth gap widens. In 2025, the top 10% of U.S. households control over 70% of the nation's wealth. Why? Because they know how to convert falling rates into long-term gains. By the time the average person saves $100 a month on debt, the wealthy have secured assets that will pay them 6 figures a year for life. That's not unfairness. That's readiness. The wealthy don't waste the window. They act.
Section 7. The mindset shift. Here's the thing. When interest rates are high, most people go straight into survival mode. They're thinking, man, how do I just get through this month? How do I pay these bills without falling behind? And honestly, it makes sense. Take 2023, for example. The average U.S. mortgage rate was over 7%. On a $300,000 home, that's around $2,000 a month in payments. That extra cost was brutal for a lot of families. So what did people do? They pulled back. They stopped spending, put off buying cars, even canceled vacations. That's survival mode. But here's where it gets interesting. When rates fall, the wealthy don't think, phew, I can finally breathe. Nope, they flip the question. They ask, okay, how can I expand in this economy? Let me give you an example. Imagine those same mortgage rates drop from 7% to 5%. On the same $300,000 home, the monthly payment falls by nearly $400. Now, the average person looks at that and thinks, great, I've got some breathing room. Maybe I can save a little or upgrade the car. But the wealthy? Totally different mindset. They see that drop as fuel. They refinance all their properties, suddenly freeing up thousands in cash flow. And what do they do with that extra money? They go out and buy more real estate. They invest in stocks. They grow their businesses. See the difference? It's the exact same interest rate cut, but two completely different outcomes. One side gets a little relief. The other side gets a whole lot richer. And the only thing separating the two is mindset.
Let's make this practical. If you want to be ready, here's your 2025 checklist. 1. Polish your credit. Pay on time, lower balances, avoid unnecessary debt. Banks lend first to the strong. 2. Build cash reserves. Doesn't need to be millions. Even $2,000 to $5,000 saved now gives you power to strike when opportunities come. 3. Track opportunities. Which neighborhoods will boom once mortgages ease? Which stocks are poised to benefit from expansion? Which businesses will thrive with cheap capital? 4. Automate investments. Don't trust emotions. Trust systems. Because when the Fed announces cuts, and they already did in 2025, you don't want to waste a second asking, what should I do? You'll already know.
Here's the truth. Lower interest rates don't make anyone rich on their own. They just open a door. But only the prepared walk through it. Most people will treat 2025's rate cuts like background noise, a smaller car payment, a slightly easier budget, a sigh of relief. But a few, the ones who prepared, will use this moment to build lasting wealth. They'll refinance strategically, invest aggressively, and expand while capital is cheap. So the real question is, when the door swings open, will you already be standing there, ready to walk through? Every dollar you prepare today is a silent worker waiting to sprint the moment the signal comes. And drop a comment below. When rates fall, what's the first move you'll make?